As you might be able to tell by my channel's name, Dividend Bull, my main focus is aggressive dividend investing. We're talking high-yielding stocks as well as other alternative investments including REITs, business development companies, closed-end funds, MLPs, and more, with the ultimate goal of finding higher dividend-paying investments that are not only safe and dependable, but will also allow us to live off of dividends sooner rather than later in our lives. But I've gotten plenty of comments from people who are not only looking for high dividend-paying investments, but they're also looking to pay less in taxes as well. Nearly all high dividend-paying investments like REITs and BDCs report their dividends as being either qualified distributions or ordinary income. If you're the type of investor who likes to pay as little as possible to the government, or maybe you're in a higher tax bracket, it usually makes more sense to shift more of your investments into stocks that paid qualified distributions. But for those of you who are serious about wanting to reduce your taxes and being able to save more of your dividends, there are investments out there that are actually tax-free depending on where you live. And those would be funds that invest specifically in municipal bonds. Municipal bonds, or commonly known as muni bonds, are a type of bond issued by a state or local government that's generally used to finance public projects like roads, schools, airports, and infrastructure-related repairs. As an incentive to get people to invest in their local government's projects, these bonds often come with tax-free interest, making them ideal for people who are either in a higher tax bracket, one income they don't have to pay taxes for, or for people who just want to lend their money to their city or state governments so they can make improvements to their communities. So as you can imagine, these type of investments can be ideal for certain investors. If you try to buy individual bonds yourself, it can be a little complicated to do so though. To buy bonds on the secondary market, you have to go to a bank or another financial institution, set up an account, and then you could pay a bond broker to find the specific bonds that you're looking for. This obviously isn't the most practical way to invest in bonds, as you'll likely have to pay transaction fees, as well as pay the broker who's searching the secondary market to find specific bonds that you're looking for based on how much you want to invest, the duration of the bonds, etc. In this day and age, it makes far more sense to, instead of investing in bonds individually, to simply buy a fund that holds municipal bonds. That way you don't have to pay additional fees for someone to find the bonds for you. If you invest in an ETF, for an example, with munis instead, you can also buy and sell all of your shares at any time without the headache of trying to find a buyer in the secondary bond market. All you need is a brokerage account, and you can buy as many municipal bonds as you want that are in a diversified portfolio. I spent a long time searching various websites to try to find some of the highest paying municipal bond ETFs and mutual funds, and I wasn't too impressed with what I initially found. Granted, there are plenty of muni bond ETFs out there, like the iShares National Muni Bond ETF, ticker symbol MUB, but these only have a dividend yield of around 2%. Granted, there is some long-term capital appreciation, but if it's your goal to live off dividends, and unless you already have a very large amount of money to invest, and we're talking at least $1 million here, then investing in this ETF isn't going to get you very much. If you had $1 million to invest in MUB at its current share price, you'd have 8,622 shares. According to NASDAQ, the yearly dividend payout per share is a little over $2.40. So 8,622 times 2.408 means you'd be living off approximately $20,761.77 per year. And considering it's $1 million, that's just not very great. I guess if you had $10 million to invest, you'd have over $207,000 to live off of per year, which is a whole lot better, but we're talking about $10 million here. Pretty much every muni bond, mutual fund, and ETF I could find had very similar dividend yields. I started to realize that investing in these vehicles might not be the best option in order to maximize the total amount of tax-free dividend income you can receive. I did some more research and I was able to find another way of investing in muni bonds that offer much higher dividend yields, and those would happen to be in muni bond closed-end funds, or CEFs. Closed-end funds are very similar to exchange-traded funds. They look like ETFs, they function like ETFs, they even trade on stock exchanges like ETFs, but they're not ETFs. There are some distinct differences between the two. The first being that CEFs are almost always actively managed, and they're allowed to make changes to their fund's portfolio without needing to go through the process of reporting those changes. This is a freedom that ETFs and mutual funds don't have, but this also means that CEFs usually have higher expense ratios since they're actively managed. And another negative thing is that if the fund is making changes frequently, it can be harder to pinpoint what exactly the fund was holding at a specific time. Because of these things, CEFs are typically regarded as being riskier than ETFs and mutual funds. but in return what we get as investors are oftentimes much higher dividend yields. So now that we know what type of muni bond investments can give us the highest dividend yields, I set out to try to find the highest yielding closed-end funds that hold municipal bonds, and I was able to find 3 funds in particular that stand out as having the highest dividend yields that I could find. As an added bonus, all of these funds pay dividends monthly as opposed to quarterly like some ETFs and mutual funds. So with that being said, let's get to number 3 on our list, which is the Eaton Vance Municipal Income Trust, ticker symbol EVN. This is a closed-end fixed income fund launched and managed by Eaton Vance Management. It invests in investment-grade municipal obligations of various sectors, such as education, electrical utilities, general obligations, healthcare, hospitals, housing, transportation, and nursing homes. This closed-end fund pays dividends on a monthly basis, with its last dividend being for 4.8 cents. It's currently trading at $13.71 per share, giving it a dividend yield of 4.21% as of the making of this video. Probably the biggest negative with this fund is that there hasn't been any capital appreciation. Its share price has actually gone down slightly since it was first launched. If you opt to reinvest those dividends though, that'll definitely help in increasing the number of dividends you'll receive every month. When we look at their biggest holdings on Seeking Alpha, we can see this fund has 323 different muni bonds inside of it as of February of this year. But remember, closed-end funds are allowed to make as many changes as they want, so it's harder to tell if their holdings have changed that dramatically or not since this was last updated. Although most CEFs don't make changes that often, so it's probably pretty similar to what we see now. As we can see, these bonds are from New Jersey, Miami, New York, Chicago, and others, so the diversity in this fund is actually a pretty good thing. At number 2 is the PIMCO Municipal Income Fund 3, ticker symbol PMX. PMX is a fund launched and managed by Pacific Investment Management Company, and the fund primarily invests in municipal bonds that pay interest that is exempt from federal income tax. PMX was formed on October 31st of 2002, and PIMCO is headquartered in Newport Beach, California. This fund also pays dividend distributions on a monthly basis, with its last being for 4.6 cents per share. It's currently trading at $12.33 per share, which gives it a dividend yield of 4.49%. Just like the last fund we looked at, this one also doesn't have much capital appreciation, with PMX also being slightly down since their launch in 2002. While this fund is also well diversified, it's not quite as diversified as EVN. But 221 holdings is still really good. I don't think any of us would want to buy 221 different individual municipal bonds. But as you can see, there's a lot of diversity in their bonds here, being from New Jersey, California, Texas, Illinois, among others. Before I get to number 1 on this list, if this video has benefited you in any sort of way, please consider clicking the like button below and also subscribing to the channel for more aggressive dividend investing videos. Dividend Bowl revolves around content related to high dividend paying stocks, ETFs, closed-end funds, alternatives, and many other vehicles that can provide a large amount of passive income. If that sounds interesting to you, hit that subscribe button to stay up to date on the latest content. Thank you all so much for your consideration. At number 1, we have the Eaton Vance Municipal Bond Fund, ticker symbol EIM. This Eaton Vance Bond Fund invests primarily in high-grade municipal obligations. EIM primarily includes investments in companies operating in the transportation, water and sewer, and electrical utilities sectors. This fund was launched back in October of 2002 with the goal of providing income exempt from federal income tax, including alternative minimum tax. Like all the other funds we discussed, this one also pays dividends on a monthly basis. Its last dividend was for 5 cents per share, which gives it a dividend yield of 4.55%. As is the case with the other 2 funds, if you're looking for serious capital appreciation, you're not going to find it with this fund. However, it is up over 14% from this time 10 years ago. But again, in 10 years, that's not a whole lot of growth. But this fund is more ideal for those seeking tax-free monthly income, not growth. From a portfolio perspective, this fund is also pretty well diversified as of the making of this video. It has 221 different holdings in it according to Seeking Alpha, which is a pretty good amount, and it has bonds from all over the country, including Florida, Illinois, New York, Texas, etc. If you do decide you want to invest in these tax-free funds, especially if your goal is to have them supply you with the majority of your dividend income, I would definitely suggest talking to a tax expert who'd be able to advise you on how to invest in these based upon where you live, your income, your lifestyle needs, and all those other factors. I'm not a tax expert, and I can't speak for every viewer, as I know that some of you live outside the United States, or just in different states that have different laws. So definitely talk to a tax pro if you're really serious about investing a ton of money in these funds. Okay, that's going to do it for today's video. Thank you all so much for watching, I really do appreciate it. Like I mentioned earlier, if this video benefited you in any sort of way, please click the like button below and also subscribe to the channel if you want to see more high dividend investing strategy videos. It would just let me know that there's a sizable enough audience out there who wants this kind of material, and I'll do my best to keep providing you with that knowledge. Okay, thanks again guys, and I'll see you next time. Take care.